Good morning. It's Thursday, July 25th, about 6 a.m. Central Time. Over at the precious metals, it's a bloodbath out there. You've got August gold down $35 at $23.79. September silver down $1.21 at $28.09. Even copper's down $2.10. Palladium is down $28 and platinum's down $22. So major sell-off in the markets. This is really a delayed reaction from yesterday's sell-off in the equities. We saw the NASDAQ and the S&P 500, the Dow, all under some serious pressure and a massive liquidation, especially in the AI stocks in the NASDAQ world. So that particular sell-off here, we saw initially a rotation of safe haven assets. We saw gold futures were up at one point breaking out to the upside. It was like 24, 28, broke out over the previous day's high. Even silver was starting to stage a bit of a recovery, and the other precious metals were quite muted. So it seemed like commodities across the board were isolated. Well, when you look past about 12:30, 1 o'clock in the afternoon, and you start to see the liquidation occur in the gold, in the silver market, and the spillover effect into the early hours of the evening session, what that tells you is it's the retail investor. So the retail investor was just taking too much pressure on their equity portfolio, and what happens is the baby goes out with the bathwater, and you see some of these safe haven assets become liquidated as well. Now, shifting focus to the CME's Fed Watch tool, and you guys all got to bookmark this on your tab. The expectations for a July interest rate cut were about 2.7% coming into yesterday. Now that's spiked to about 10.9%. If I click over to September and I start looking at that, you're starting to bring back in a 21% chance of a 50 basis point cut and a 1.5% chance, the first time I've seen this, of a 75 basis point cut. So there are no expectations for them to leave interest rates unchanged at the moment. So getting into the technicals here, the gold market still continues to hold in 2378. We're still maintaining about the 50-day moving average as your critical level of support. It's not good that we are below that 2400. So I told you guys, and if you get the metal's edge, I wrote in there that the pivot point is 2400. However, if we break below that psychological level, you could see over the last couple metal's edge, I said that we'll probably go down to 2375, which is the 50-day, and that's where we're at right now. So the next kind of line in the sand is going to be 2358.60. We go below there, the futures markets are going to go to a neutral trend on the gold market. Now, I don't see an extended bear market in the gold market because of the fact once we get these interest rate cuts going and as things continue to unwind, is once the liquidation is done in the gold market, people will go back into that as a safe haven play. Now you get into silver. I gave you the warning signs, which were, we saw, and if you look on the metal's edge, excuse me again, DMI minus crossing over DMI plus. That was like 3 days ago. That's your warning shot that tells you that we are on shaky ground. It means that the buyers and the sellers are starting to gain momentum. And things are compressing technically. So we have broken to a bearish trend here today if we close at these levels. If you look at the system, it's going to show that we're neutral because it uses the closing basis, which is yesterday. But if we maintain this type of close today, it doesn't look good. You've got DMI minus over plus. You've got stochastics in oversold territory. Remember, that does not mean that the market is oversold. It means that it's confirming that we're going into a bear market. The average true range still stuck at about 93 cents. So the 200-day moving average 2640, that's your key level support. We do have a lot of data coming out today. We've got advanced GDP. We've got unemployment claims. The claims 243,000 last week, 237 are the expectations. If we see anything elevated at this 235 or better, I think that it continues to cement more and more that we're going to get that interest rate cut. And I'm really just interested to see how July is going to play out because there's only 6 days from when that Fed has its next meeting. It's got to be next Tuesday and Wednesday or Monday and Tuesdays when the meeting, and then that's when that decision would need to take place. I just don't think they'll have enough data, but if the selling is that much hemorrhaging, perhaps maybe they go and they do a courtesy cut, but I've never really seen that before. They generally don't cut rates just to cut rates. We'll have the advanced GDP, we'll have the core durable goods, and then tomorrow is really the day where we're going to get that PCE data, and that's the one that that the Fed mostly watches here. So we'll continue to want to monitor that as well. If you got any questions, give me a call. It's a little bit shorter of a video. I just got to Chicago. I got to get things set up over here. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.